Hi, this is Shankar Sharma. In this video, we're going to discuss both the numbers of Abbv as well as Lilly and see which one is looking better, which stock is better, which has got better earnings, better value for money, and all that good stuff. Let's also compare the charts while we are there. Let's get started. Hi, welcome back. Abbv and Lilly. Let's check and see which stock is looking better. So first of all, I got here Abbv. If you look at Abbv, Abbv is in immunology, neuroscience, oncology, aesthetics, eye care, and women's health, and all that good stuff. If you see country-wise, United States is the biggest contributor, followed by Germany, Canada, and all other countries. And France and Spain are also contributing, but Germany seems to be the biggest contributor in Europe. So that is Abbv's general what it's doing and what sort of areas it is catering to, which countries it is supplying, etc. Now, if you look at Abbv's earnings, Abbv has come up with bumper earnings and its EPS exceeded expectations. This is earnings per share, EPS. EPS exceeded expectations. 2.91 is expected. 3 it's reported, so it's exceeded. If you look at the revenues, revenues also higher than the expected 14.28 billion. So both in revenues and earnings, it exceeded expectations. On top, Abbv has announced increased dividends. That is always a good sign for a stock when they increase the dividends. It's a very healthy sign. Now let's look at the statements. If you look at the cash flow is all in good shape, nothing major there. If you look at the balance sheet is assets or more than liabilities, so overall that is looking good. Total equity could be better, but it is okay. Otherwise, all other things looking okay there. Let's look at the income statement. If you look at the total revenue year on year, that is improving, gross profit improving, operating income improving, pre-tax income could be better, but overall it is looking okay. If you are a value investor, you would probably check the PE ratio. So PE ratio is a little bit on the higher side. If you're a value investor, this may not be one of your top picks, but otherwise that's not a bad thing. And if you come down and look at return on assets, that is positive and good, equity positive and good. Gross margin is pretty good. Net margins are a little bit down, but so this is the current quarter as quarter two. So if you look at quarter two, the debt to asset ratio is very good. Debt to equity would be much better. So all it is implying is this company has got a slightly higher debt compared to the equity. That is all it is saying. So overall, if you're a momentum investor or if you're a technical analysis type investor, this looks good. If you're a value investor, you probably might skip it. If you're a fundamental analysis based investor, you probably will go for it. Overall, if you see price earnings ratio is 57, and that is probably one thing that value analysis people will probably hesitate. Now, overview, if you see revenues compared to last quarter is higher. Net income is pretty much same. Margins are a tad bit lower. So rest of things we've already checked. Now I want to take you to the chart and analyze the stock chart of Abbv. I've already got things drawn for you ready so that I don't take too much of your time. If you see, there's a cup and handle pattern, and I also got Fibonacci targets. If you see, we have a confluence. 229 is the possible future target of Abbv. There is not a buy or sell recommendation or hold recommendation. It's based on technical analysis and momentum. If it crosses 200, it's quite likely to get to 229 in the coming months. This is a weekly chart, so it may take a few months to get there. So overall, Abbv with this increased dividend is looking good. If you're a value analyst, probably you may give a skip. But if you're a momentum or technical analysis based investor, you probably will still take a trade on this one. Now let's go to Eli Lilly and check the numbers. If you look at Eli Lilly, its main products are human pharmaceutical or animal health, and majority of monies are coming from United States and Europe. The monies it is getting from Europe is a little bit higher what Abbv is getting, but Eli Lilly today reduced its guidance. So let's go and check the statements, if you look at the earnings, you can see it failed to meet expectations on EPS, that is earnings per share. If you look at the revenue is also a mess. So EPS is a mess, revenue is a mess, and the guidance is lower. So some of its weight loss drugs did not get to the same level of their expectation in terms of money wise. So that is currently looking a bit negative on Eli Lilly. And if you look at Eli Lilly's statements, if you look at its assets and liabilities, it has got good amount of assets and liabilities. Liabilities wise, liability is something takes money away from your pocket. As I put some money into the business pocket, you can see 63.94 on that is looking good. So if you want to know about asset and liability definitions, you want to look at Robert Kiyosaki's Rich Dad Poor Dad, where he gives definition of asset as something puts money in the pocket, and liability is something takes money away from the pocket. Same thing is applicable here for the business. Overall, the total net debt for Eli Lilly is slightly higher. The other numbers, look at the income statement. Income statement, gross profit is positive. Net income is positive. That is that number. So operating expenses slightly higher, which is normal for this type of companies. So if you go back and check statistics, just check the P ratio, it's very, very high. So value investor will definitely not touch this particular stock. And if you look at the debt to assets ratio, that is healthy. Debt to equity is much better place than Abbv. So if you're a value investor, you probably don't touch both Abbv and Eli Lilly. If you're a fundamental investor, you probably will like both. But if you're a momentum technical analysis based investor, a momentum investor, you probably will go ahead and take a look at this, but on the other side, on the downside. So if you look at this is Eli Lilly's stock price. Now you can see today on the back of the missed earnings and missed revenues and lower guidance, the stock has gapped down, which means most likely we're heading towards 725 range on Eli Lilly in the longer run. So Eli Lilly is not looking like a great buy at the moment. I may find its support around here. And in terms of comparison, Abbv is looking better than Eli Lilly. Abbv is looking better than Lilly, in other words. And if you're a value investor, you won't be touching either of this. But if you're a momentum or technical analysis based investor, you probably will like Abbv to the upside and Eli Lilly to the downside. Hopefully that is quite clear. And don't forget to subscribe to this channel and leave a positive comment. I'll see you in the next video. This is Shankar Sharma signing off. Bye for now.